Hello everyone, welcome back to the Relai Bitcoin podcast. Today I have an amazing guest, the legend himself, Michael Saylor. Thank you so much for taking some time to share your valuable insights and experience with us. How are you today?
I'm awesome. Yeah, thanks for having me on the show.
I mean, you of course you're awesome. You just got, like MicroStrategy just got added to the Nasdaq 100, right? This is a very, very big milestone, and I think this is the first time you are talking about it here. What does that mean to you? What does it mean to the company? And what does it mean to the future? Like, what potential does it unlock for MicroStrategy to be in this index?
Well, I mean, I view Bitcoin as the digital transformation of capital, and so the entire crypto industry is about the digital transformation of the capital markets. And MicroStrategy is the leading public holder of Bitcoin and of digital assets now. And so getting embraced by the Nasdaq 100 is an excellent milestone. It means that they're recognizing the power of digital assets technology. They're recognizing the potential of digital capital. I think it's enormously legitimizing for Bitcoin. It's legitimizing for MicroStrategy, and it's very auspicious for the entire digital assets industry. And what it means is that all of the mainstream investors that have any exposure to QQQ, and the General Technology Index, now they're Bitcoiners. And it's a way that we introduce Bitcoin into the equity capital markets and conventional technology investment portfolios. And I think those are all just awesome things.
How much money will flow into MicroStrategy and then directly into Bitcoin through that passively? I think I read the number somewhere is like 5 trillion in passive investment funds will now have, somehow access to Bitcoin through MicroStrategy.
I mean, I think they say there's like $350 billion of capital invested in the QQQ ETF. And there's probably more capital that's invested into the Nasdaq 100 index via other mutual funds and other instruments. MicroStrategy is going to be the 40th largest company in that index. And I think our weighting is about 50 basis points or in that range. And so if there were $400 billion of capital indexed to it, then maybe that means $2 billion of capital might flow from those passive instruments into the MicroStrategy stock.
And on the other hand, you're still actively raising, right? I mean, it's crazy, the 42 billion ATM that you have announced just a couple of months ago, and you're already ripping through like half of it or something after a few months. You have these 3 years time, basically, where you can raise and allocate this capital to Bitcoin. Like, maybe talk a little bit about that. Why are you doing this so quickly? What are you expecting for 2025? How much allocation, what size of allocation will you do? And what's next? Like, we'll just keep raising the next ATM, or?
Well, when we announced that plan, believe it or not, that was fairly ambitious, October 30th. I mean, that represented a big acceleration in our plans because we had raised about $5 billion in the year up to that point, and we'd raised about $10 billion of capital for the 4 years previous. And so for us to lay out a $42 billion capital plan was pretty ambitious.
It was unprecedented.
And if you're running a public company, it's important to underpromise and overdeliver. So we felt confident that we could do it over 3 years. But when you're in a public company, you're in a partnership with the capital markets and with your public company investors. And so we can take a leadership position, but then the question is, how will our equity investors react? And how will the options market react? And how will the convertible bonds market react? And how will the Bitcoin market react? And how will the nation states and the governments of the world react. So the day after we announced that, our stock traded up. I mean, we out-traded all the big tech companies, and we out-traded all the Bitcoin companies. We out-traded Bitcoin. And so we thought that the markets would be very supportive, but we couldn't be certain. Right? So, I mean, I can't very well say, hey, I'm going to do it next week. Maybe the markets won't let me do it next week, right? So we created a plan. The markets were very supportive. And then at that point, we knew we would be able to go a little bit faster than 3 years. And then November 5th elections came. And if you remember, Bitcoin was like 68,000, 68, 69,000 then. And at 8 p.m. on November 5th, nobody knew what was going to happen. It could have been a blue sweep. It could have been a red, white, and blue, mix. It could have been a red sweep. So by 8 a.m. the next morning, it was clear there was a red wave, and we were going to have a very pro-Bitcoin, pro-crypto White House administration, Senate, House. And I think the capital markets were emboldened by that. And so we had a surge of support for the entire industry, including a surge of support for Bitcoin. And of course, Bitcoin has gone from 68,000 and is just touching 108 or something. Yeah. So, I certainly can't promise that on October 30th, right? Yeah. So we react to the capital markets, and we're in partnership with them. And so we ended up going faster because the capital markets were more enthusiastic. And, we've raised, about $17 billion or something in the 6 weeks. So that's, our bond issue was oversubscribed. We'd really done like $1 billion convertible bond before, and then we came out of the gate thinking maybe we would do something that was twice as big, but it became 3 times as big.
It's crazy.
So again, that's a negotiation with the capital market. So if they're enthusiastic, right, and if they want to buy the securities, then we sell the securities, and so we went faster. I think a foolish consistency is the hobgoblin of small minds, right? Famous quote, not my quote. And so we set a plan. The capital markets are more favorably disposed to the plan, so they wanted us to go faster, so we go faster. And that changes day by day, week by week. So we're very programmatic and very rigorous and very thoughtful about what we do, and we're always looking at, I'm looking at the balance between the equity capital markets and the options markets and the bond markets and the Bitcoin markets. And the Bitcoin markets are balanced against the futures markets, right? And all of those things are in dialogue with each other all the time. And our view is we'll continue to pursue our strategy in the most responsible fashion. It's not a complicated strategy. I mean, we've said it, for the past 4 years. We're going to raise money and buy Bitcoin. We're not going to sell the Bitcoin. And, how much Bitcoin are we going to buy? As I've said before, right? As much as we can buy. We're not holding back. We think that's good for Bitcoin. We think that's good for the world. We think that's good for the entire crypto economy. We think that's good for our shareholders. Generally, in deciding what kind of transactions we do, we're informed by a set of analytics, and maybe the most important one is BTC yield. Yep. And so BTC yield is a KPI. It's a metric where we calculate the accretion in Bitcoin per share on a fully diluted basis. So if hypothetically, Julian, if I had $100 of Bitcoin per share, and if my stock was trading at $100, then I could sell $1 billion of the stock and I could buy $1 billion of Bitcoin, but it would be completely neutral. There would be no accretion. That would be BTC yield equals 0. If my stock had $100 of Bitcoin per share in it and someone offered me, if they called me on the phone and said, hey, I'll give you $10 billion today if you sell me the stock at $50 a share, well, that's a negative BTC yield. That's dilutive. So you see, if I just wanted to raise money and buy Bitcoin, I could do it on a neutral basis or a dilutive basis. But we're not stupid, and our shareholders aren't stupid, and so you have to assume that if you're diluting your shareholders, they will lose their enthusiasm for buying your stock. So we don't do that. And we don't do transactions that are dilutive. If I could sell the stock at $300 a share and I had $100 a share of Bitcoin, then we do that transaction, then that's a 66% spread. That means if I raise $1 billion of capital, I'm selling $1 billion of securities backed by $333 million of Bitcoin. So, and then I'm buying back $1 billion of Bitcoin. So it's like I'm selling $333 million of Bitcoin in order to buy back $1 billion of Bitcoin. That means I have a net gain, a net Bitcoin gain of $666 million. That's accretive, right? You would do that trade. That will generate BTC yield. That'll be positive yield. So, so when we're doing these things, we're considering, is there a yield? Is it accretive? Now, if I took that $300 stock backed by $100 of Bitcoin, and then you offered, you said you wanted a bond from me, a convertible bond, and if I could sell the convertible bond at a 50% premium, then the strike price is $450. So that's like selling stock at $450 backed by $100 of Bitcoin. You see, if I sold a $900 million bond, it would be backed by $200 million of Bitcoin. I'm selling $200 million of Bitcoin to buy back $900 million of Bitcoin. That's $700 million of accretion.
So basically what you keep doing is you keep increasing the exposure per share for your shareholders, the Bitcoin exposure. Like shareholders get a bigger Bitcoin exposure than if they would just buy Bitcoin, right?
Yeah. Like the note the note that I made this morning, right? I just posted this on Twitter, and or X, I guess, is the platform of choice. I'll give you the exact numbers, right? We generated a 72.4% BTC yield this year from our treasury operations. So that means you have 72.4% more Bitcoin per share now than you had on January 1st. Well, when you look at the amount of Bitcoin we had January 1st, that means it's like we generated 136,965 Bitcoin without any cost and without any dilution. So it was like earning 136,965 Bitcoin. And then, of course, what's that worth? Well, if you plug in $107,000 per Bitcoin, which is what it was when I tweeted this morning, that equates to $14.66 billion for the year. $14.6 billion, right? It's like making $14.6 billion in the year. So if we do accretive capital markets transactions, what we're doing is we're securitizing the Bitcoin and we're selling securities at a premium to the net asset value of the underlying commodity. And you can do this a variety of ways. You can do it by selling equity at a premium. You can do it by selling convertible bonds at even greater premium. You can also do it by selling straight bonds. If you just sell you sell a $500 million bond and you're paying 6% interest, Well, then there's no dilution, right? You didn't issue any shares. You just bought $500 million worth of Bitcoin, and there's zero share dilution. You have an interest payment. So if Bitcoin generates 60% a year in return, and that's what it's been doing for the past probably 10 years. But for the past 4 years, since we've been doing it, it's been 60% or more. So if I'm borrowing money at 6% and I'm loaning it out to the Bitcoin network at 60%, I'm actually capturing 90% of the yield. And so I'm generating 54% in the spread. So it's really a BTC spread of like 90%, right? Yeah. But you could also say if I did $1 billion of that, I'm making $540 million a year on the arbitrage, right? And so those are three different ways that you can generate BTC yield, right? And the company is always choosing, right? We're picking and choosing. Do we want to borrow money from the debt markets? Do we want to, or let me say it a different way. Do we want to sell securities to the debt market? Do we want to sell securities to the convertible bond market? Do we want to sell securities to the equity market? We could, in theory, sell securities to insurance companies or private investors. We haven't, but we could. If an insurance company wanted, if they wanted us to pay them X% interest and swap that for cash, we could just do a deal directly with a large insurance company and just do a swap. Or we could sell a preferred stock, where you basically just sell preferred shares that give someone some kind of dividend or some kind of conversion rate, and they give you money, and you give them the preferred securities, right? So those are things that public companies can do, right? I mean, literally public companies exist to sell securities to the public markets. Yeah. So we're always considering that, right? And we just have to trade off, what is the liability to our capital structure, and then what is the interest expense, and what is the dilution to our common equity. And then what kind of premium can we generate versus, or spread can we generate against the underlying Bitcoin asset? And we pick and choose, and we do that, we think about it week by week, day by day, quarter by quarter, and then we construct those capital market securities transactions.
Hey everyone, this is Joel from Relai, and I'm here today to tell you about Relai Private. It's our exclusive service for private clients, small offices, small to mid-sized businesses, or just anyone looking to stack more sats with a higher volume. As a Relai Private client, you'll have access to a dedicated account manager, a team, and obviously a white glove service to help you with your Bitcoin needs. You also get personalized 24/7 access to our team, and you are in it for the special selection of reports and data we are sending to our Relai Private clients. If that sounds like something you or someone you know should like, send them to relay.app/private or click the link in the description below.
In order
you're
to
just
do
finding these very
thing.
asymmetric opportunities in the market where you can just make great deals. But why? So how should let's say a young investor, like millennial investor that starts to have money and wants to allocate it to the capital market, invest, how should they think about allocating to Bitcoin directly, to MicroStrategy, which is like a Bitcoin derivative with some kind of you can think about it as leverage, and other asset classes?
Well, I think Bitcoin is the risk-free rate in the digital assets economy. And so the best way to think of it is the risk-free rate, and by risk-free, I mean, you're accepting the existential risk of Bitcoin extinction event. Okay, so you've accepted that risk, just like when you cross the street, you accept the risk of getting hit by a car. And when you live in Germany, you accept the risk of getting hit by a meteorite, right? So there is that existential extinction level risk. But once you've accepted that risk, then the risk-free rate on the fiat economy is really SOFR, the standard overnight funding rate. is like 4.8% right now pre-tax, and it'd be like 3.2% after tax, depending on your tax rate. The risk-free rate in the crypto economy is Bitcoin. And so Bitcoin's been going up 60% a year. So you could say right now it's about 60% as the risk-free rate. But, you know, my long-term forecast over 21 years, and I'm conservative, is 29% ARR. So when I evaluate any investment decision that anybody offers me, I start by saying, well, my hurdle rate is 29%, you know, tax-deferred capital gain for 21 years. So are you proposing to me an investment idea that can beat that after tax, risk-adjusted? So as you can imagine, right, that means you have to pitch me an idea that's 60% ARR, right? It's got to be an insanely profitable idea. And even then it would be kind of dilutive and distracting. So I tend to think, you know, that the safe strategy for most people, if you don't want to take risk and if you don't want to be an investor, then you just buy Bitcoin and hold it. I think that the best ideas are ideas built on Bitcoin. So for example, if you were to say to me, well, that's good, Mike, but I want better than 29%. Okay. Well, my question would be, okay, well, do you have a house? Can you mortgage it? If you can get a 15-year loan for 6%, well, if you pay 6% interest on a 15-year loan against real estate and you invest it at 30%, then you're getting 80% of the yield in the swap, right? So that's probably a way to boost your return beyond the 29%. So I think long-term cheap debt, right? I mean, not short-term debt. Like I'm not in favor of, like, don't be a degenerate and go on a crypto exchange and do a 20-to-1 levered trade on Bitcoin, because you might get liquidated on Saturday night in volatility. So that's kind of stupid leverage. I mean, people are very simplistic, especially on the web. It's like they really aren't capable of sophisticated ideas. So it's like either leverage good or leverage bad, but not really, no. Like, for example, if I give you a 100-year loan, no recourse for 1% interest, or let's make it simple. I'll give you a 100-year loan, no recourse, unsecured for 0% interest. That's leverage. Is that bad? It's like, that's no different than me just giving you the money, right? Yeah. I mean, so there's a certain type of leverage that is no different than I'm just going to give you $10 billion for free. Go bet it. And then after you're dead, maybe it will turn out to not have worked. But how is that different than me just giving you $100 billion right now and saying, just go spend it, and after you're dead, maybe people will disagree on what you spent it on, okay? So if the terms of the leverage are good enough, that starts to look like equity. A 30-year, you could have borrowed money for 30 years for 2.75% interest 2 years ago in the US. I said, mortgage your house, right? And people said, oh, you're crazy. You're telling people to take that risk. Borrowing money for 30 years at 2.75% when Bitcoin is going up 60% is not stupid. It's actually the most intelligent thing you possibly could have done. The stupidest thing you could have done was sell Bitcoin at $10,000 a coin and paid off the 3% mortgage, right?
Yeah. Yeah. In Europe, it's sometimes even worse. Like Adam, my co-founder, he lives in France and he bought his house with a mortgage. He got a mortgage, I think it's 1 or 1.5% for 25 years. And just look at the euro inflation, right? This basically in 25 years, this debt is basically inflated away, and his house has appreciated. And of course, he could probably the intelligent thing to do would be to even increase this and put it into Bitcoin. But yeah, so there are amazing opportunities when it comes to debt out there.
Look, the risk-free, the cost of capital in the conventional economy is the S&P index. It's like 15%. In the last 4 years. In the Bitcoin economy, it's 60%. if you can borrow money for 3% or 4% or 6%, if it's not going to be mark to market, if you don't have to pay it back for a decade, okay. I think that ironically, those are the safest kinds of strategies, right? I mean, and that's what I've done at MicroStrategy, right? I mean, so we borrow $7.2 billion at no recourse, unsecured, about 4 to 5 year duration, 42 basis points, so, it's effectively free money.
Yeah.
No strings attached. In 5 years, I have to be right on the trade, but so if you were 20% levered, if you had $1 million of Bitcoin and you could borrow 200,000 at 1% interest, for 5 or 10 years, I mean that's not a bad idea, right? Now you've got 1.2 billion worth of Bitcoin and the cost of debt is free. So I would start by evaluating what are your sources of cheap capital, because a lot of fiat capital there was a point, I think, when the 30-year euro swap rate was like 20 basis points. I'd be like they were just insanely cheap, interest rates. So if you can get cheap capital and you can buy Bitcoin and you can hold it more than 4 years, it probably makes sense. If you can hold it 10 years, it's a no-brainer.
Yeah.
When you look at companies, MicroStrategy, other companies on the Bitcoin standard, they're investments, Julian, right? So read the prospectus, study the filings, right? I think we have a good capital structure right now, but the point is, don't take my word for it. Look at it, think for yourself. A lot of people don't really think. They're like, oh my God, MicroStrategy is going to get liquidated at Bitcoin. It's like, well, dude, no, Bitcoin could go to $1 a Bitcoin. We're not getting liquidated. We're just going to buy all the Bitcoin if it goes to $1 a Bitcoin, then it's going to go back up again, right? But people just say things. They're like, well, I heard you have some leverage, and so therefore there must be a liquidation price. But it's the same people that they look at, BTC yield. They go, oh, well, that's not really yield. I mean, did you even read the one-page 8K? Most of the people that just go free, they won't even read one page. Like they can't get through 2 paragraphs of text, much less 20 pages. So if you're the kind of person that can't read 20 pages of investment filings, you probably shouldn't invest in stocks, and you probably shouldn't invest. You should just buy Bitcoin, put it in cold storage, and go to sleep for 30 years, and you'll be fine, right? But if you're an investor, if you're a public company investor and you're willing to read hundreds of pages of legal filings, then you could decide whether you want to invest in one of those companies. They all have more risk. They all have counterparty risk, mine, everybody else. But of course, the point is you should do it because you expect more reward, And again, here I make the point. If you literally run a hedge fund and your job is to invest billions of dollars of capital in public companies, that's actually what you have to do. That's your job, right? You're not allowed to invest in Bitcoin. A lot of times people say, well, why do people buy MicroStrategy instead of Bitcoin? Well, it's because it's literally illegal. They'll get fired if they buy the Bitcoin. They can't, right? Mm-hmm. And so people miss the obvious point. There are large pools of capital. If you're a venture capitalist, you got to invest in a company that offers you private equity. If you're a public market investor, you have to invest in a public company. If you're a commodities trader, you have to invest in commodities. If you're a convertible bond arbitrager, you have to invest in convertible bonds, right? That's literally what your job is. When you raise the capital to do that, they came with strings attached. Mm-hmm. The strings are you have to use it this way. If you break the rules, maybe I sue you, maybe I fire you, maybe you go to jail, maybe I take the capital back. And so the people in the crypto Twitter ecosystem, sometimes they don't really understand there's $500 trillion of capital and it's sitting in silos and the capital has to be deployed in a certain way. So my advice to a private investor is if you're not the smartest person in the room, if you're the smartest person in the room in the market, you are. Trust me. Like when I'm the smartest guy in an industry, I know I'm the smartest guy in the industry because I know every single other actor in the industry, and then I will actually move aggressively. But I stay in my lane, and if you invite me into a poker game of a lot of stupid, dopey-looking people in the back room of a casino, and I'm not, I don't know any of them, and they all start betting big, I'm not the guy that thinks I'm the smartest guy at the table, right? I'm thinking maybe if I think I'm the smartest guy at the table, that's because they wanted me to think I'm the smartest guy at the table. So you ought to stay in your lane, and if you're a public company investor, you know that you are, and trust me, they're pretty smart. And if you're a private equity investor, if you're a venture capitalist, then you're going to want to invest in companies that are ideally on the Bitcoin standard, right? And you would, if I was a venture capitalist, I would go looking for a company that's a private company that has a Bitcoin-backed treasury, and then I would make a private investment in them for preferred stock, maybe Bitcoin preferred stock. And I would say, here's $100 million. You have to buy at least 90 million of Bitcoin and not sell it. I want first lien on the Bitcoin. You can do whatever you want with the other $10 million, and you give me X% of the company. And then hopefully you go public in the next 24 months, and then their company will be valued at 3 times or 4x the multiple it is right now, and we're all going to make a lot of money. Okay, so if you're a venture capitalist, if you know Bitcoin, and if you know venture capitalists, then you should be doing those kind of deals. If you're not a venture capitalist, you should not be doing those deals.
Yep.
Right? So I just say to everybody, make sure you stay in your lane. If you're not a professional investor, you shouldn't make investments. Bitcoin is not an investment. Bitcoin is savings. You're saving your money. You're buying desirable property. The metaphor is, I give you a choice. Do you want to buy 10,000 acres in Kansas or 10,000, 10,000 blocks of a city at a fair price, at a price that everybody else agrees is fair? Do you want to buy scarce desirable property at a fair market price and wait for some property developer to develop it in the future? Or would you like to take all your money and develop a mixed-use apartment complex, hotel chain, commercial office building, even though you don't know what you're doing? Right? If you have humility, you would say, I'm not the world's greatest real estate developer in New York City, and so for me to decide to spend all the money developing office spaces and hotels and nightclubs and restaurants and get all the zoning permits and decide on the type of concrete and hire the contractor and deal with the unions and rent the thing out, that's very risky. I don't think, you either know how to do it and you know you're the best and then you should do it, or you don't. And if you don't know what you're doing, buy the underlying property and wait for someone that knows more than you do about how to develop the property, and let them do the heavy lifting, because one day they'll come to you and they'll say, I really need that 10,000 acres that you bought in Kansas. I'll give you 10 times as much money for it. I'm going to do all this stuff. I'm going to develop Disneyland in Kansas. Okay, and again, if you're arrogant, you'll go, no, I'm going to develop Disneyland in Kansas because I know more than Disney and I know more than you, and I'm not going to sell to you. Okay, well, that's just arrogant and stupid. You either should hold it because you don't need to sell it and wait for someone to develop a spaceport on your land, or you should sell it to the dude that's going to create Disneyland in Kansas for 10x your money, or you should borrow against it. But know what you know and stay in your lane. And I think like MicroStrategy is doing sophisticated things. We're securitizing Bitcoin in the capital markets. We're doing it because we can, because that's our best use of our assets. That doesn't mean you should. I'm not even telling you to invest in us. If you're smart enough to know that you should invest in us, then do it. But if you don't want to do it, don't, right? I am saying buy Bitcoin. Bitcoin is the risk-free, return in the market. If you don't want to do anything, take the money that you don't need for 10 years, whether you can, if you can sell equity in your company, if you can raise capital by mortgaging your company or mortgaging your house under good terms, or if you have cash lying around or cash flows, and you're asking me, what should you do with it? My answer is simple. It's what I've said every day for the past 4.5 years. You should buy Bitcoin, hold the Bitcoin, don't sell the Bitcoin. Period. Full stop.
And that's for a private investor. Now, if you look at companies, right, there are different companies. They're publicly traded, huge corporations. They're big private companies. They're small private companies, SMEs, and then there are startups. Do they have, when it comes to Bitcoin treasury strategy, should they have different strategies, or is it the simple strategy you just laid out for everyone? Because not all the companies have the same access to capital, right? Or not all of them have the same profitability or the same stable balance sheets, etc.
I think it's the same strategy for everybody, which is you ought to recapitalize on Bitcoin. Make Bitcoin your primary treasury reserve asset. You should hold somewhere between 3 months and 12 months of cash in the local fiat currency that your liabilities are denominated in, whether it's the euro or the dollar or something. Mm-hmm. And then all the extra capital you have, you should just buy Bitcoin with it and hold it. And then if you can raise capital, you should raise as much capital as you can at a fair. If your company is worth 10 million, then you should raise $5 million in capital, buy $5 million of Bitcoin, hold it on your balance sheet, keep running your company, right? Mm. If you can raise 50 million, you should raise 50 million. If you can raise 500 million, you should raise 500 million. If you can raise 5 billion, you should raise 5 billion. It's very unlikely that your company is going to grow faster than 60% a year.
At least
it's very unlikely over 21 years that you'll grow faster than 29% a year without any more cash, without any more capital, right? So it's possible. I rather think that if you said to me you're going to grow more than 60% a year, I would say, well, you probably have to do that built on a capital structure of Bitcoin.
Yeah.
Like MicroStrategy is doing it, but we're doing it with Bitcoin.
Yeah. We're
not doing it against Bitcoin. So I think the idea is simple. It's there's 400 million companies in the world. There's 60,000 public companies. They're all capitalized on the US dollar for the most part, or something pegged to the dollar. Mm-hmm. Okay, just recapitalize your company on BTC. While you're capitalized on the dollar, you are negatively polarized to capital. That means that when you invest your capital in treasuries or hold the dollar, you're getting minus 15% real return. You're destroying 10 to 15% of your capital every year that you're holding it. It's toxic. You're pumping toxic sludge in your veins. You're drinking poisonous water. You're drinking swamp water. You're eating mud. Okay? What's my suggestion? Stop drinking swamp water. Stop eating mud. Clean capital. Pump Bitcoin into your corporate veins. Bitcoin is plus 60% a year. That means it's 45% better a year than the S&P index. It's better than your own company, right? Bitcoin is outperforming 99.9% or 99.99% of all the companies in the world. So if you have a big ego, you think you're better. You think you've got this massive ego. You're going to outperform Bitcoin? I doubt it. But even if so, even if you thought you were going to outperform Bitcoin, the smart thing to do is next time you raise money, double the amount of money you raise and put half of it into Bitcoin, because that's the obvious diversification. You're buying a company growing 60% a year at 1 times revenue. There's not a single competent CEO in the world that wouldn't buy a company at 1 times revenue that was growing 60% a year that might decelerate to 30% a year. So it's a very simple strategy. Recapitalize on Bitcoin. When you do it, you'll be positively polarized to capital. You're creating a magnetic field that's attracting capital. When you become positively polarized to capital, that means you'll be able to raise 100 million. Well, first you'll raise 10 million, then you'll raise 100 million, then you'll raise $1 billion, then you'll raise 10 billion, then you'll raise 100 billion. You'll slurp all the capital out of the ecosystem. That's what Metaplanet's doing in Japan.
Yep.
That's what MicroStrategy is doing in the US. That's what Mara is doing right now. Yep. That's what Riot is doing. Right? Luckily for you, only 6 out of 60,000 publicly traded companies are doing it aggressively. And just a handful of the 400 million private companies. So the big winners are the people that flip the polarity from negative to positive. And you do it in the next 4 years and you'll, I don't know, I think you could 100x your company. If you do it in the next 10 years, you should 10x your company. After 10 years, you'll have to do it to stay in business. Maybe it'll be 20 years, but there's a point when we go from it being a 100x to a 1000x opportunity to it being, just necessary for you not to be fired or not to go bankrupt. And I mean, the next 10 years will be good ones for doing it, but the next 4 years are extraordinarily good opportunity to do it.
And that's clearly what we're seeing, right? I mean, these companies you just mentioned are only a few that are now starting to adopt the Bitcoin treasury, and they all go up 60, 80, 100% within days after they announce these things, because they get a strategic advantage when they switch from the fiat operating system to the Bitcoin operating system, because in 10 years they will have much more, they can invest again, and they can outgrow the competition, etc. And I think just many more companies will find out. Unfortunately, Microsoft hasn't found out.
Can I just make this point? I mean, it's just so simple. You walk into a meeting with a bunch of potential investors, and you have a choice. You can dress up in a Halloween costume that makes you repulsive, or you can be beautiful and attractive. When you go meet people and you ask for money, do you want to be repulsive or do you want to be attractive? I mean, isn't it just that simple in life? Yeah. I mean, it really is. You have a chance to be attractive to capital, or you can be repulsive to capital, right? Once you understand Bitcoin, you understand, what are you going to do with my money? I'm going to invest it in something that loses 10% of its value every year. That sounds repulsive. What are you going to do with my money? I'm going to invest it in something that increases by 45% every single year in value. That's attractive. The world is just waking up to this idea that you can either be repulsive to capital or attractive to capital. But if you look at the history of the human race, it's like, I give you fire or you can freeze to death and starve to death. I give you electricity or you can, have slaves turn millstones. Or use donkey carts, right? I give you a plane, or you can get in a Conestoga wagon with horses and take 6 months to try to cross the continent. I give you a nuclear reactor, it's like unlimited, clean, infinite power, or you can burn coal, in a stove, or burn wood in a stove. It's a very simple concept. It's just better technology. Do you want to power your company with a crypto reactor with Bitcoin as the fuel? Or do you want to power your company with a wood burning stove that, stinks up the house and leaves you with choking fumes? Chop down all the trees in the forest, right, in order to power your village with a bunch of wood burning stoves. It's not that complicated as long as you open your eyes. The actual metrics in the market are to make it simple, is if you're holding the US dollar on your balance sheet, it's zero ARR, zero volatility against itself, right? Like you hold the dollar for a year, it's zero volatile, it's going to go up zero. And you know that the US dollar in general will lose 7% of its purchasing power against scarce desirable resources every year forever, right? Once you understand that idea, then you look at Bitcoin, it's 60% ARR, 60 vol. For the past 4 years, for the past 10 years, I mean, is 10 years enough, right? After 10 years of it doing that, or 4 years of it doing that, is that enough? You can be, you can be pessimistic and conservative and say, well, maybe it's only going to be 30-30 vol, 30 AR, 30 vol. Okay, well, so cut it in half. It's still double the S&P index, which is 1515. These are all straightforward numbers, right? If you have twice the performance of the S&P index and twice the volatility of the S&P index, your options are twice as valuable, actually more than twice as valuable, but the equity is more than twice as valuable. I mean, everything's just twice as good. It may be, and over time it becomes infinitely better because that twice as good this year compounds exponentially. So there's trillions of dollars indexed to the S&P 500. If I give you a security which is twice as good, how much capital do you think I can get? How much do you want to buy? Right? You're a rich man, and I'm selling you a security which returns 1/3 of the performance of the S&P index. How many of my securities do you want to buy? None of them. Now I give you a security which returns double the S&P index. How many of my securities do you want to buy? All of them. Right? All of them, meaning I will buy up to the limits of my risk mandate. Like if I have $10 billion and you have an equity which returns on a risk-adjusted basis twice as much as the S&P index, if your Sharpe ratio is better, I'll give you $500 million in a meeting. Now, if it's half as good, I'll give you $0 in a meeting. It's a very simple idea, right? Which is you want your company to outperform the hurdle rate if you want to attract the equity. And if you want to attract options traders, like if you look at Bitcoin options, they trade with 60 vol. Everybody wants to trade them. MicroStrategy trades with 120 vol. We have $100 billion plus options market on MicroStrategy stock. The bond market, BND, if you look at that index, it's just a bunch of corporate bonds. There's no options market on it. It's 5 vol. Why would you want to trade 5 vol? Like there's no optionality in it, right? Mm. And so at the end of the day, if you have 60 ARR, 60 vol, that's like I'm on a train going 60 miles an hour through Europe, and I have a flywheel, a 10-ton flywheel, and it's spinning at 60 RPM. You're an engineer. Okay, that's energy. That's energy. You can tap that energy. And now there's a US dollar standard company. They have $10 billion in capital. That's like a normie standing on a plane with a 10-ton statue next to him. The world is flat. He's not going anywhere. And his capital is just a statue to look at. You understand the difference between having a 10-ton flywheel moving 60 miles an hour versus a 10-ton statue on a plane. And so, like, here's the big idea, Julian. You can transform the 10-ton statue into a 10-ton flywheel that's moving 60 miles an hour. Why wouldn't you?
Well, that's the big question. Why wouldn't you, especially if you have 75 billion on your balance sheet like Microsoft? I mean, you talk to Microsoft, you try to explain everything that you just explained to them, and yet they didn't decide to do it. Actually, only 0.55% of the shareholders voted for the Bitcoin Treasury strategy. 99 plus% against? What happened?
You can't make this stuff up, can you? It's pretty hilarious. Okay, so I'm going to give you another metaphor. You are a naked man freezing to death on a mountain, right, in the Alps, you know, and you're Courchevel, and you're running through the forest of Courchevel, you know, in the middle of the winter, naked and freezing, and lightning strikes the tree next to you, and it starts a fire, and all of a sudden there's a bonfire, and you look at it, and there's wood around, and you stop and you think, well, God has saved me. Lord Prometheus has given me the gift of fire. I'm not going to die. I'm not going to freeze to death. I can build a fire. I can probably dry my clothes. I can cook my food. Thank you. A gift from the gods. Now, you're a rich billionaire that owns billions of dollars of Microsoft stock. And you're walking through the forest holding your skis because you just went skiing, and you're going back to your chalet with your beautiful wife and your kids and all your friends and the 27 people that are your servants and your helicopters in the backyard. And you're about to throw a dinner party, you know, eat well, entertain your friends, have a good drink, après-ski, whatever it is. And then lightning strikes the tree next to you, and you look at the lightning, and your reaction is, what a nuisance. Take your phone, call ski patrol, get the fire department out here to put out the fire right now. It's a hazard. It's going to smoke up the area. I got to get back to my ski chalet. My friends and family are waiting for me. Click.
Disturbing. It's disturbing.
You know?
Yeah.
And it all comes down to, are you the billionaire and comfortable with a great life, or are you a naked, starving man, you know, looking for a lifeline? And so it's the same gift from the God. It's all context. The people that get Bitcoin have a need to know. If you don't have a need to know, you won't get it. It's a distraction. You may actually literally see it as a disturbance and a threat, and you'll ask the fire department to put the fire out. But, you know, if you need it, you're definitely going to go for it. But if you're an engineer, you know, by the way, if you're a 70-year-old engineer and you made a fortune by, you know, developing water wheels or, you know, developing, you know, some old antiquated technology, maybe you build wooden ships with sails in them, you're not going to get it. But if you're Henry Ford and you see the fire, you might actually take the fire, put it in an engine, put the engine in a carriage, create a horseless carriage, create a car, create an automobile industry, and sell it to the world, right? Because you actually see it as the future of an industry. So everybody sees in Bitcoin, you know, what they ought to see, right? If you have a need to know, it may save your life. If you're an entrepreneur, an engineer, it may create your company. If you have enough capital, MicroStrategy we basically took that, and we took a $600 million company and made it a $100 billion company in 4 years.
That has joined the Nasdaq 100.
Yeah, and so that's what we did. And then other people will look at it and say, oh, it's a threat to my way of life, or it's a distraction, or whatever. Let's just move on with the next thing. But that's okay. You know, the volatility is a gift to the faithful. The complexity, right, is a gift to the youthful and the ambitious. It's like it's a gift to the next generation. You have the opportunity to harness digital energy and create the future. If you have a need to know, if you have the courage, the clarity, conviction, the commitment, then you'll create something great. And look at 65-year-old conductors in Carnegie Hall. They're not the guys that picked up the electric guitar. They're not Led Zeppelin. right? Led Zeppelin was a bunch of teenagers and 20-somethings. They're the ones that needed rock and roll music, and they needed the electric guitar, right? And they needed amplifiers. And, their parents and their grandparents thought, this is the music of the devil. It's going to be the end of, the civilization. And not quite, right? You just decide how you want to react to this. It's technology. It's an opportunity for those that need an opportunity.
And it's the opportunity of our generation's lifetime, right? I think that's a very nice one to end it. Thank you so much, Michael. This was super inspiring, super exciting. Always to talk to you. Thank you. Have a great festive time and keep doing what you're doing. You're fucking killing it. Thank you, and all the best. Talk to you soon.
Same to you, Julian.
Bye.
Hey, this is Joel again from the Relai team. First of all, thanks for listening or watching to the podcast. We really appreciate your help here. If you want to actually help us out further, you can leave us a 5-star review in the Apple Podcasting Store, in Spotify, on YouTube, or wherever you listen to podcasts, because this way we'll actually reach more people with this fantastic content. And I'll see you in the next one.